What's going on, you all? My name is Brandon, and in this video I'm going to be going over 5 of the best low-risk investments you could be making right now. Any economic downturn can be a little worrisome for investors, but there are still several investment opportunities that can provide investors a measure of safety and stability. Also, if you do enjoy this video, a like would be very appreciated. And now let's jump into the first investment. Defensive stocks are companies that tend to perform well even in a weaker economy. These companies often provide essential products or services like healthcare, consumer staples, and utilities. They tend to have stable earnings and consistent dividends, which makes them attractive to investors during a recession. When investing in defensive stocks, it's important to consider each stock's valuation. Defensive stocks can sometimes be overpriced during a recession as investors flock to safe haven assets. This can lead to lower returns and higher risks. To avoid this, investors should look for defensive stocks that have reasonable valuations and a solid history of performance. One way to see if a stock is overvalued is by looking at their price to earnings ratio. While a PE ratio doesn't always show the full picture, investors consider a good ratio to be between 20 and 25. Government bonds are issued by the national government, and they're usually considered one of the safest investments you can make. They are backed by the full faith and credit of the government and are usually used as a benchmark for other investments. For those of you who don't know what a bond is, here's a very simple explanation for you. Let's say you buy a bond with a $10,000 principal, or the amount you're lending, and a 2% interest rate per year for 10 years. Every year you will be paid that 2% interest, or $200 in this case, and at the end of the 10 years, the organization or company that issued the bond will pay you back your principal of $10,000 plus that $2,000 in interest over the course of the bond's term. One key factor to consider when investing in government bonds is their yield, which is the amount of interest they pay. Generally, government bonds offer lower yields than other fixed income investments such as corporate bonds or high yield bonds. However, their lower yields are compensated by their lower default risk. Gold has been considered a safe haven asset for centuries. This is because it is a tangible asset that can be stored and held, which makes it very attractive to investors in times of economic uncertainty. The price of gold tends to rise when investors are worried about inflation or geopolitical risks. In addition, gold has a low correlation with other assets, such as stocks and bonds, which makes it a good diversification tool. When investing in gold, it's important to consider the form in which you want to invest. Investors can buy physical gold, such as coins or bars, or they can invest in gold ETFs, which hold physical gold. Investing in physical gold can be expensive and requires secure storage. Gold ETFs, on the other hand, offer a more convenient and affordable way to invest in gold. It's important to do your research and choose a reputable gold ETF with low fees and a solid track record. Real estate investment trusts are companies that own and operate income-generating real estate properties. They are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. REITs can provide investors with a steady stream of income even during a recession as they generate revenue from rent payments. They are also a good diversification tool because they have a low correlation with other assets such as stocks and bonds. When investing in real estate investment trusts, it's important to consider which properties they own. Some REITs specialize in residential properties, while others focus on commercial or industrial properties. Investors should also consider the REIT's dividend yield and payout ratio, as well as its historical performance. While it may not seem like an investment, holding cash during a recession can be a very smart strategy. Cash provides investors with liquidity and flexibility, which can be valuable in times of market uncertainty. Holding cash allows investors to take advantage of buying opportunities when the market is down. It also provides a safety net in case of unexpected expenses or emergencies. However, holding too much cash can be a disadvantage as it may not keep up with inflation over time. Investors should consider keeping enough cash on hand to cover any expenses that may arise, but also invest in other assets that offer higher returns over the long term. In conclusion, if you want to minimize risk while still investing, it's important to focus on investments that will offer you more predictability and stability. Defensive stocks, government bonds, gold, REITs, and cash are all potential options for investors to consider. And it's also important to do your own research and consider your individual goals, as every investor is different and this is not financial advice. And as always, thank you so much for watching, and don't forget to like and subscribe to keep updated with my latest personal finance videos.